Hello again, everyone. This is Joe Henches with Beyond the Chart, your source for exceptional video analysis of stocks, ETFs, and indices, so you can become a better trader. Welcome back. Today is Wednesday, July 29th. We're going to take a look at the market action of the last 2 days and look at a few international indices or indicators, and then 5 stocks tonight. Let's see my list here. Facebook, VDSI, which I know is a security stock. I can never remember what Vasco, I think it is. Vasco Data Security. Yelp, Twitter, and KNDI Technologies. All right, start off here with the Dow. The Dow was up, let's see, 121 points today, but up 311 points over the last 2 days. So on Saturday, in the video on Saturday, I talked about, let's see, actually it was Monday night. Let's see, what day is that? Come on, little cursor. Yeah, 7/27 Monday night. I said the stock market has been down 5 days in a row. There's a pretty good high probability that we're going to get a bounce. But I also said there's nothing to guarantee that. There's no certainty in that. I mean, there's nothing that says it can't be down 8-9 days in a row, but the longer you push this out and pull this rubber band, you're going to get some kind of pullback, and we did. Now, what kind of retracement are we looking at here? We go across crosshairs because it helps me set it up. If we look at the high of this move and the low of this move, we have now pulled back almost exactly 50% on the Dow Industrial. So that's a reasonable target. Can we go to 61.8? Absolutely, and some of the other indices have. And I think if we look at the S&P 500, now the interesting thing about the S&P 500, again, I talked about this went to a higher high, so some people are saying, well, this is the retracement. Well, when I look at the Dow Industrials, it's a little different because it did not go to a higher high. The trend to me is still down. So, and we went to a lower low. So this is the retracement. Little confusing picture that we're getting here. Now, if I stay with this and say, okay, this is the move, and we come back down, then we've retraced a little over 61.8% in here. And would expect this thing to turn around at some point fairly soon. The NASDAQ, what has it done in terms of its move down? It's retraced about halfway between 38 and 50% retracement in terms of pulling back on this move. The next one that we've got, New York Composite. This was a little stronger bounce back, but again, look at how many days, 1, 2, 3, 4, 5, 6, 7 days down in a row. So if we take this move and we look at, oh, that's not good. It grabs something else. Let me see if I can. I think it's grabbing the moving average. And there we go. All right, so a little bit over 61.8% on this pullback. So you can see the kind of pullback that we've gotten. We'll see whether we continue to get some continuation or do we reverse back down. Now, the Russell 2000 is a little bit different in here in that, you know, we had this trend line, this second trend line, and it was broken. And now we look like we pulled back to it. And so this is going to be interesting to see whether or not that becomes some kind of resistance here. And this is just a pullback to the trend line, which initially, visually, that's what it looks like. I might have thought that it would have stopped at this previous low, but it didn't seem to have a problem with that today. Okay, so those are the indices. Well, let me take a look at the international. Let's take a German DAX. So the German DAX on Monday had a pretty good whack down, and then we got this bounce. Of course, that was the whole thing. And I didn't show this, but this was, again, related to the big sell-off in all the markets on Monday because of China and reacting to China. And so here we get a little bounce back in Germany, but these don't look very strong to me. This is all within the trading range of Monday. These look like just little consolidation type bars. So we'll have to continue to watch that. India, this is not looking as strong as I thought it would. Now, this could be a series of 1-2s. I mean, I got this as 1-2, 1-2. This could be another 1-2, but I am a little suspicious that something else is stalling out and something else is going on here. But you must say that the short-term trend is still higher because we still have, hasn't taken out this low yet here. But the fact that I'm getting this moving average cross in here makes me a little suspicious that, there's something going on. So we'll have to watch that. Right now, the trend is still higher. And of course, China, the Shanghai Composite, here's what happened. On yesterday, it gapped down on the opening, pulls back up and rallies, then sells off in the second half. And then today we had a push. Now, from what I read, that a lot of the push came in the last hour. I don't know. And some people were saying it was government-related buying, and that wouldn't surprise me at all based on what we're hearing, but who knows? And I have no idea whether all the shares are trading again on the Shanghai Composite. At one point, back when all this was going on, they shut down at least half of them, and then even when they reopened back, there was still only a quarter of them or so that were not trading. So I have no idea whether it's fully liquid at this point or not, but this looks a little bit counter trendish. Then this looks like a resumption of it, but again, we haven't gone to a lower low. We take out this point, it's going to be very bearish, I believe, because this is a pretty strong little reversal type candle in here. You take out the low of a reversal bar like that just, like right here, look at this reversal bar. Everybody would have thought, well, wow, we're reversing, we're coming up here. And then we take that out and boom, down we go. Let's see. I think that's it. Let's take a look at our indicators. Short-term trading index. It's probably right in front of my face. There it is. Okay, so the trend is 0.62 bullish reading today because the market being up strong, but the 10 days coming down. 0.986 is the blue line, 0.986. So again, we're rapidly approaching, because of this little rally, rapidly approaching down into that below the red line. The VIX, boy, this thing is just all over the place, and just here we go. I mean, big moves, 3-day moves, and then here 2-day retracing almost the entire thing, and then we close back down. So tremendous amount of volatility whipping back and forth going on right now. So it's really, really hard to get a reading based off of this, although on Monday, I did say this looked like a doji type candle, and that it probably was going to pause. Well, in getting this type of a candle when the market was down 5 to 7 days in a row was kind of an indication that we're going to get a bounce, and we sure did. All right, the next thing is the high-low, and of course the high-low is bouncing with everything else, and it came back 2 days all the way back up here. Now, again, has not taken out these previous highs. We're just basically back to neutral land, almost to zero. So we had, 16 more new lows. There were 16 more 52-week new lows than new highs today on a day when the Dow was up over 100 points. Okay, let's see. The next one, I think I want to move into the high yield bond fund. Take a look at the kind of our key ETFs and markets. I like taking a look at this because it kind of gives you a little bit of a pulse of what's going on, with everything. And so here the high yield, the risk on, risk off type thing. Again, high yield bonds are rallying last 2 days, and it's really interesting how they are just right in rhythm with the market. And of course, this has been leading us down. I mean, it's taken out the lows. This was very negative. I talked about that. This huge consolidation pattern, head and shoulders consolidation pattern that it broke down out of. So right now the trend is still down, and it's still has that bearish tone to it, bearish look to it. The next one we're going to take a look at is the long-term bond which they went down for 2 days in a row now, but very slightly. But I am wondering whether or not this choppy move in here has now reached its peak. Got to the top of the Keltner channels. This kind of looks like a fourth wave in here, and a lot of times you get these triangular type things, and why I'm saying that is just because of it looks almost like a little bit of a broadening type of activity in here with the this is the containment of the move, and it just looks like that kind of broadening, and I'm suspicious that this may be a fourth right here. We'll see whether this comes back down and get a couple closes below 10 and start swinging back down again. So, I mean, the Federal Reserve came out today, did not do anything with interest rates. Surprise, surprise. And then I think the indication is that everybody's thinking September or shortly thereafter, depending on what they're seeing. And so if this continues down, if bonds continue down, it's a sign that the market's saying interest rates are going up. All right, let's see. The next one is the dollar index. And let's see the dollar. Here we go. And dollar was up today. In the last 2 days, we got a little bit of a bounce. Now, it doesn't look like we've taken out the high, 97.28. No, we did not take out Monday's high on that down day. So these are still considered inside bars to me for this move. And I would like to see if the dollar is going to continue up and continue stronger like I'm expecting it to. It's going to need to take out this 3-day high in here and take out Monday's high. All right, the next one is oil that we'll take a look at. And United States oil, here it is. And of course, we talked about on Monday how we were just fractionally off the low, and then we got a little bounce here. So we're right down, right at the lows here, and crude oil September futures contract closed at $48.89 a barrel. And the last one is gold, and then we'll get into the stocks. And the gold basically flat over the last 3 days. I mean, we've been down since Friday, and 105.17. Gold, September gold closed at $1,096.10 on the September gold contract. So really just a little bit of consolidation after this big move. We'll see again whether this is going to hold or not. All right, let's take a look. Let's dive into our stocks. The first one we're going to take a look at is Facebook. Okay, here's Facebook. And, Facebook, this was very messy and real hard to diagnose. I do think it's some kind of very complex wave 2 sideways consolidation, and then we're getting this wave 3, minor wave 3 push up in through here. And so today Facebook was up $1.70, and kind of continuing the move. They had earnings came out right after the market closed, and then immediately there was a $5 downdraft down here to like 91, 92. It bounces all the way back up to even, and currently as we speak, which is a little over 5 o'clock Central Time, Facebook is trading down about $3. So we're trading 93.82, 93.80, something like that. So we're down just under 94 down in here. So, really it all depends on what's being said on the conference calls and all the Q&A and all that good stuff and the outlook. And so right now it's pulling back some. But to me, this looks like, we've done, I'm not quite sure whether we've even completed the third minor wave up here. I think we might have a little bit more, and then we'll get a fourth wave of consolidation that might be a little sharper pullback since we had this sideways consolidation in wave 2. At least that's what it looks like to me. The next one we're going to take a look at is Yelp, and Yelp got killed today. This is a big drop. Let's see, the percentage down 25% on Yelp, down $8.45, closing at $25.06. This is continuing this trend, and of course this big drop occurred in here after they said, well, they talked about, well, we're going to sell ourselves. oh, no, we're not going to sell ourselves. And so then now this is rolled over and was trending down. And actually, shame on me for not getting in either. Now, I know I talked about not getting in here, but I should have gotten in somewhere in this mess in here because of the strong trend down. But, you know, it is what it is now. Big drop, and we're just going to have to wait and see where it gets support. The next one is VDSI. Vasco Data Security. This got hit today too, and I assume the earnings came out. I was not paying attention to the earnings on Vasco. So down, what is this, down 23% today. So big drop, down $6.10. And again, this looks like it's rolled over. I looked at this a while back. I can't remember, maybe a month ago. I can't remember exactly when it was. And so I was estimating that this first primary wave up, 5 intermediate waves, would have concluded right about here based on Fibonacci projections. That was pretty doggone close. And now we've rolling over. And so the real question is, where are we going to get support? When you look in here, here's some previous lows here of the 4th wave. And it's right about where this is. You got a gap close right here at 96.26 would close that. $19.26 would close that gap exactly. That's a little bit lower, and then of course you get some consolidation, you know, support, potential support right in here also. So 18 to 19, that would be my guess to see whether we get support coming in on that at that point. So that's Vasco Data Security. And number 4 is Twitter, down 14.5%. Of course, everybody was looking at that, and everybody's talking about the earnings came out last night after the market closed. And it was interesting how, you know, on trading yesterday, you know, the stock, you know, here closes at 34.70 and closes on the day earnings are coming out at almost $2 a share. And then when the initial earnings came out, it jumped about $2. Sure, but by the time all the dust settled and everything and all the talking was done and the market opened this morning, it was way down here. So down $5.30 at 14.5%. This just cannot seem to get looking any better. It's trying. It was trying right in here. But, you know, again, the trend, the 55-day moving average is down. Now we've got the 10 breaking back below the 21 again. You know, the 233-day, the long term, is starting to roll over, somewhat flat, but starting to roll over. You look at the bigger picture. I still am counting this as some kind of wave structure down, and it just keeps reinforcing the count so far. And especially if it comes down here and takes out this low, it's really going to reinforce it. But we'll see. I mean, right now, it's not a good picture on Twitter. The last one we're going to take a look at is KNDI Technologies, the Chinese ADR. Haven't looked at this in a while either, and this one broke a major trend line. The moving averages continue to be negative. Thought it might get some support in here. Looked at this when this was plunging and breaking down. Here was a support zone. It bounced back up, and then it got resistance in this. It got resistance in this support zone that had been broken, and now became resistance. And I identified that as $10.30 to $10.68. And these are things I did not put on the chart today. They've been on here for a little while, and so the selling came back in up in this area and rolled it back over, broke it back down through this low that you can see. Let me blow that up. So here was the low of $8.52, and this got to $8.44, bounced slightly, and then smashed right down through it. So it's continuing to stair step its way down, and the moving averages are all pointing negative. Now, the one positive I'll point out, again, it has retraced quite a bit. There's a couple things going on. The volume, the 50-day moving average of volume, is like 700,000 shares right now. And back up over in here near the top, it was almost 4 million shares, 50-day moving average back here, and 3, and 2.5, and so there's a lot more volume and activity. Now it's all drying up as this is dropping down in here, and this has retraced over 68% of the move. If we look at the entire move from here all the way up to here from 2009, it's now retraced quite a bit, but the problem is this looks like a full 5-wave move, and there really is no guarantee as to where this has to stop. I mean, it can retrace quite a bit, and breaking this trend line is a big negative. Now, the last thing I'll just mention, and then we're done for tonight, is that there is some there's some divergence coming in, but you got to be a little bit careful about this. But the divergence is showing up between here and here, and it did that on all the indicators, but it got a little bounce to the 10 and then just rolled back down again a little bit. And now more divergence is showing up. So there's a possibility that it is trying to get its legs underneath it and trying to turn. All the 3 of my indicators are saying that's what's occurring, but you got to let price tell you that that's what happened. And right now they're still down below the moving averages, although it looks like it is trying to turn a little bit. So we'll see whether or not Candy can start to turn. The trend is still down, but it looks like it's trying to take a shot. So, all right, that's it for tonight. Longer than I expected to go. So anyway, I will be back on Saturday. Try to have 1 or 2 videos out over the next 2 days on an individual stock. I'll be back on Saturday with the weekend update. So if you're watching this video anywhere besides my website at joehenches.net, head on over there, check out the posts. If you're not a subscriber, subscribe. It gives you email notification of when I put the posts out, and gives you access to the Trade Ideas webpage and the free PDF I've got for you also. So until next time, stay focused, follow your plan, trade without fear. Have a great Thursday, Friday, everyone.